Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is February 19th. It is Friday, 2021. I hope everybody has a great weekend. Be safe and healthy out there. And what I wanted to share with you today is Uber and Shopify, these two companies. I wanted to kind of go over their earnings for this last quarter for these two companies. Looking here at Seeking Alpha. By the way, I'm not a financial advisor and I'm not an accountant or an economist, so please do your own research before you invest. Investing in the stock market could be really risky, as some people have found out with what happened with GameStop and some of those other companies over the last week. So do your own research, please, and subscribe to the channel if you haven't already. Thank you if you have already. Please hit the like button and feel free to share with your family and friends. So Uber, you can see here, according to Seeking Alpha, at the end of the trading day today, the stock was at 58.40, and year to date they are up over 18% at 18.67%. So the stock actually made a pretty good jump last year, right around November. I think it was right after the election there, where they had the proposition that didn't go through in the state of California, which was going to require Uber to treat their independent contractors as full-time employees. So the stock went from November 3rd at 35.77, November 9th it was 48.18, and now it's been around the $55-$60 range over the last few weeks here. So I personally own a little bit of Uber here in my Robinhood portfolio. Of the three portfolios that I use, my Roth IRA is with M1 Finance, my individual account is with Fidelity, and then Robinhood is my growth portfolio. So even though I do now have more dividend paying companies in Robinhood than I originally had planned, but a couple of the companies I don't plan on keeping long term. So, but Uber, I kind of want to see, it's just kind of I want to feel it out and see what they might do. Me personally, I have a little over 3 shares because Robinhood does do fractional shares now at the average cost of $34.28. And so my total return is over 70% just because I put in $103 and now it is my market value is at $176. So I do like Uber as a service in general, and I do like, like when I don't know, when I was coming back from Mexico, when I was coming back from Belize, any of those countries, Korea recently in 2019, Philippines too, I think, Philippines. I used Uber from the airport back to my place here. I haven't really used them around town. I did drive for them for a little bit. People really like it here in Honolulu. We have a lot of tourism here in Hawaii, so people use that more than a taxi just because it's kind of cheaper, which means, in my opinion, Uber might be raising their costs now because their numbers aren't that good. As you can see here, this is Alpha Street. It's a website that I use for a lot of these videos. If you want to see my other ones, they are under stock analysis. And this is just a quick summary stock analysis of Uber and Shopify that we're going to look at here in this video. So for quarter 4 of 2020, this is reporting February 10th of this year, 2021. You can see revenue, not good. GAAP revenue, $3 billion, but is down 16%. Net loss, over $960 million versus $1 billion previously. And the numbers aren't good because the mobility side is down. And that is mainly because of the pandemic. In the U.S. here, a lot of people started buying cars instead of using public transportation and instead of doing Uber or Lyft. So, and of course, here in Hawaii, there was a huge downturn where basically I don't think anybody was really driving at all because Hawaii is a huge tourism state, and with no travel really, there was no reason for people here to drive anymore. So, and you can see here in their segment revenue by percentage, mobility is down 52%. However, they have seen huge gains, up 100% in the delivery side. They acquired Postmates. Now they're looking to acquire Drizzly, the alcohol delivery app. So they're kind of, I think, in my opinion, they're looking to kind of grab all the market share on the delivery side and maybe press forward with that, maybe even press forward with the freight side as well too, their trucking side, which grew 43%. That's just my opinion. What they're looking to do, they have done a lot of cuts as far as employees and stuff like that, and things that they did at their different offices and stuff to help with the bottom line. because their current CEO, Dara, I can't say his last name, sorry, but he originally thought that they would be profitable come the end of 2020. Of course, with the pandemic, that didn't happen. So now he's saying by the end of 2021, the company Uber should be profitable. So I kind of want to see what's going to happen. I kind of want to see, are they going to get to profitability, which in my opinion will send the stock soaring again, because it's just a very popular company. Their services are very easy to use, and the drivers seem to like doing it for the most part. I mean, outside of your larger cities like Los Angeles, New York City, maybe even Chicago, where the markets are just overly saturated with rideshare drivers and delivery drivers, I think the other parts of the country, the drivers are probably liking it to a certain degree. You know, you set your own hours and stuff like that. So, but as far as the numbers are concerned, it just doesn't look very good for Uber. U.S. and Canada revenue, this is by regions and percentage, down 26%. Latin America down 43%. These are two areas here that were really, really hurt in the lockdown economy. Europe, Middle East, and Asia up 25%, not because of the Europe side, probably more of the Middle East and the Asia side. Uber does own some of Careem. They are out of the Middle East. And I believe they gave up their shares of Grab, which is in the Philippines, and I forget the other countries that Grab is in, but I used Grab for food service and for rides when I was in the Philippines. And then Asia Pacific grew 70%, and that might be, it might not be the delivery side, it might be a combination of delivery and rides, just because some of those countries were able to open up a little bit faster than we were. So, and again, that's just kind of my opinion on why these numbers are the way that they are. If I was to look at their S1 and their and do a full report on all those lines and numbers and stuff like that, we would see a little bit more details. But this is just kind of a summary just to give you an idea of what has been happening with Uber. So gross booking segment, you can see down 5%, only $17 billion. Mobility, over $6.5 billion. Delivery, $10 billion. I'm pretty sure that's close to a record for them, as delivery wasn't that big of a deal before the stay-at-home economy. And then freight at $313 million. So operating stats here, monthly active platform consumers, and you can see just how the numbers have fallen. It has gotten better from quarter 4 of 2019, where it was at 111 million consumers that were using the platform. In quarter 1 of 2020, it dropped to 103, and then quarter 2 of 2020, it dropped to 55 million consumers. Not good at all. So when your main business was started and that's what it is, and then you drop down to 55 million people using the service, the numbers aren't going to be great. But it has rebounded, and it has rebounded very, very quickly. You can see in quarter 3 of 2020, it jumped up to 78 million, and then this last quarter up to 93 million. So getting closer to that quarter 4 2019 number of 100 million platform users. As far as trips are concerned, this is in the billions, and you can see it was way up here, almost 2 billion trips in quarter 4 of 2019. And then now it is at almost 1.5 billion for quarter 4 of 2020. Now, if things get opened back up come this summer, June, July, around 4th of July, you could probably see maybe Uber and Lyft's, their trips and their monthly active consumers, riders and stuff like that jump some more. But I think the main thing is going to be delivery for them. So cost and expenses was down 14%, which is still a little bit up, $14 billion, which is still good, that you can alleviate some of your expenses. Long-term debt grew, of course, $7.5 billion in cash and cash equivalents. This $5.6 billion, I'm assuming, is by more debt that they have taken on. So that is Uber for you. Please like the video if you haven't already. And my question for you is, are you invested in Uber? Are you invested in Shopify? Let me know in the comments section. And then, so let's look at Shopify here. I have them in my Robinhood portfolio as well, too. I don't own a lot of Shopify. I don't even own a quarter of a fraction of a share. I do love fractional shares. The majority of my holdings, I think I'm at $20,000 total, not with Robinhood, but with all my brokerage accounts together. No 401k or anything like that, just M1 Finance, Fidelity, a little bit of Webull, and Robinhood around $20,000. But with Shopify, I only own 0.12 shares, so not even a quarter of a share. But I got in at a really low cost when it was trading, when it was starting to rebound. Not even rebound. I think it was taking off. Because Shopify, it's a Canadian company. They help small and medium businesses with their e-commerce sales and businesses. And a lot of people individually, not even like a brick and mortar type store, have made a lot of money selling on Shopify. I think it was really taking off because with the stay-at-home economy, people were, buying on Pinterest, eBay, Amazon. So there were just digital platforms was huge in for the stay-at-home economy that we've been in for the last year and a half or so, or going on to a year and a half, I should say. Hopefully it doesn't get to a full year and a half. I guess it's really only been a year, February now. But so my average cost over $780. I put in $100 at the beginning, so I'm only up 81%, almost 82% with the company. I really like the company, so even though it is trading at $1,400, my personal opinion, I think that this could be trading at $2,000, no problem, as the company continues to grow. And with that growth, they have partnered or are looking to partner with Facebook to do their to help them with their online payment structure. So I don't know if you have sold or bought anything on Facebook. I have sold a handful of things on Facebook. Every now and then I look around and I'm like, okay, I'm going to get rid of this now. Sometimes it's old cell phones or old cell phone cases or earbuds or something like that. And my transactions have always been cash. So now Facebook is looking to have Shopify help them with their online business sales, payment transactions and stuff like that. So that could send the stock price soaring more because there could be more revenue. More revenue, more growth means stock price goes up. Now, the company doesn't pay a dividend. They are a tech company. They are growing, $181 billion market cap. And over the last year, the stock has grown, as you can see here, over 170%. If you were really, really lucky and you got in at this company back here in 2016, which I was not investing at back in 2016, not entirely sure where I was. I think I was working on a ship somewhere. If you got in when this stock was around the $30 and $20 share price back in 2016, then you have gained over 7,000%, which you're probably a millionaire. Even if you bought like 20 shares back then at $20 or $30, you're pretty close to a millionaire with a 7,000% gain. So, but I really like the company. I think they have tons of room to growth. And again, back to Alpha Street here. This is quarter 4 2020, reported February 17th of this year, 2021. Revenue grew an amazing, and this is ridiculous growth, 94% to almost $1 billion at $977 million. Net income up almost $124 million. GAAP earnings per share up, non-GAAP earnings per share up, and then you can see their segments here for revenue grew 53%. And you can see what their numbers were. This is in the millions. Quarter 4 of 2019, $183 million, and then quarter 4 of 2020, $279 million. So huge growth pretty much everywhere. Merchant Solutions, the same thing, 100% growth, almost $700 million brought in for quarter 4 of 2020. And then we scroll down here a little bit more. Again, I'm using Alpha Street as the website. I like how they put this graph together here. Like I said at the beginning of the video, cash equivalents, over $6 billion. Operating cash flow, $425 million. The company is profitable, by the way. So that is another reason why I like this company, because they are profitable and they still have a lot more to grow, because there are tons of people out there that would like to sell out of their house, out of their garage. It's the modern day garage sale, if you will, or rummage sale. So if that's the case and they continue to expand of course, they're going to expand with smaller individuals, but if they continue to expand to brick and mortar places, maybe not just Instagram and Facebook are using the service, but then maybe another big e-commerce platform picks them up. Maybe TikTok picks them up or something like that, Then the stock price and their revenues continue to grow. As far as monthly recurring revenue, up 53%. Gross merchandise volume up 99%, over $41 billion. So they're in the billions now as far as gross payments and gross merchandise volume is concerned. And their gross payments grew to $19 billion, or didn't grow to $19 billion, but up 46%. And then operating expenses is nice to see that it is down 33%. So all this revenue is coming in, the millions and millions of dollars, the billions of dollars coming in. And then their operating expenses drops almost $400 million, which means that the balance sheet is looking better and better. Operating income over 112 million. And then their gross profit up 91%, over $500 million. So a great company. My personal opinion, look into them if you are interested in a growing e-commerce company, because I don't want to say that Amazon has tapped out, has gone as far as it's going to go. And I don't think that's true. And I don't want to say that of Google either. Facebook, I think maybe kind of, just because Mark Zuckerberg's in the news all the time for good and bad. And recently in 2020, it seemed like it was more bad than good. And it also looks like the U.S. government is going to step in with Amazon, Google, and Facebook and try and limit some of their growth right now. Maybe break up some of their businesses. Shopify might be the next one. Shopify might be the next one to get to that $2,000, $2,500, $2,200 stock price. So you can kind of look for some, for some growth there. I am personally, if it drops down to $900 or $800, I'll add some more. More than likely, it's not going to be $800 or $900 because, like I say in all my videos, I don't have a lot of money. I don't make a lot of money. So, and I am still a new investor, and I'm trying to build up my Roth IRA first. But if you are a growth investor, in my opinion, look into grabbing some Shopify. Look at grabbing some Uber. But in my opinion, between Uber and Shopify, and even Lyft, I would probably take Uber over Lyft, and I would take Shopify over both of those. So anyway, thanks for checking out my video. Hope you have had a great weekend, depending on when you're watching this. Mahalo and aloha, everybody.